Thank you, buddy.
Right.
Steve Miller, Ask Slim, welcome back to F.A.C.E, and thank you for your patience, buddy.
All right. Glad to be here again. Thanks.
Yeah. And you know what? I'm really looking forward to seeing what's on your radar, Steve. I've seen your work quite, 3-4 times now, and I keep an eye on what you say, and I've seen a lot of things manifest that you've talked about. So you share your screen. Maybe we could get into what's on your radar.
Okay. It says I can't start video here. Is that different?
Oh, I don't have video going, but
okay, that's okay. So I just share the screen.
Yeah, we'll do that.
Okay, that's great.
And we'll send 8x10 glossy autographed pictures out to everyone.
All right, you should see my charts now. Do you see them?
I do. They are so cool. Go ahead, man.
If you remember, you're talking about what we discussed last time. We talked about the stock market, and that was back in December when the work had shown that there was a large decline likely to come into the March timeframe. Yeah. And sure enough, there it is. Boom. It just absolutely bullseyed. And now, of course, we're getting a rebound. Question is, what is the how far is the rebound going to go? It's amazing. I'm going to blow up the weekly chart here. And for those of you that are new to our analysis, it's cycle analysis made up of 3 components, basically the market rhythms that we look at. And on the bottom, you'll see those cycle brackets. And that gives you the energies of the market, essentially money flows. And it's broken up into dominant and minor cycles. And we also look at momentum conditions. And we also look at what we call swing high, swing low to get our projections and support resistance levels. So it's those 3 components of the work we do. We have 4 analysts here at Ask Slim, so all doing this type of work. So there's the rebound in there that really was very much on time. You can see this area right over here is where the low was suggested. And it came just a little bit early, not that far out of normal variance. And now we got into this rebound. And now I'm getting so many emails and comments out on social media because everybody's used to this market that has been since
by the dip.
Since for 13 years essentially with the Fed's great experiment and buy the dip. And usually, when and my monthly and quarterly cycles all point to a lot of trouble this year, and we thought it would be a bear market year. Usually after you have this initial downward wave, and this is well within the norm, you get a rebound, and the rebound takes you up right over here into the 61.8, 78.6. And then you get, you start to move into the next downward phase, which is what we're projecting out over here, which takes you out into the fall. So this, we believe, is a false rally that's going on right now with all of the buy the dippers and we got through this correction people and they're adding, but the world is a very changed place, as are the market conditions.
Okay, so it looks like, and I've heard this before, that the market could stay alive until midsummer, July. I mean, we just entered spring,
June,
right?
June, July is what we're really looking at, is the potential for the peak of this upward move. It could last a little bit longer. It could last less. There are times when the rebound when bear markets tops are forming, and sometimes they take a long time. There are times when the rebound fails very quickly, and then you begin to move down again very, very quickly. So we can't really tell time-wise. I do, as I look at the minor cycle pattern right in here, what it's suggestive of is some further rally here, a pullback here into May, then some other rally into June, July, and then the dominant cycle begins to take over, just as it did right over here. Now note, when the momentum turned negative, and this is a reversal scout, that was the beginning of the correction of this entire cycle and a bottom right on time. Now we're getting this little upturn in momentum right there, which is normal that you would get during this period. So momentum looks a little better. And usually when you get the upturn, it doesn't fail immediately.
Exactly. So we have to squeeze out all the pessimism. People were asking me, Steve, at the lows that we had last week, They said, I said, Dale, what's a bullish argument for stocks? And I said, no one wants them. That was it.
Yeah.
Wasn't that was it was strictly sentiment and people wrong-footed, in my opinion. How about you?
Yeah, I just think that, it gets sold out. Everybody thinks the end of the world is here. And when you have what's going on geopolitically, and when you see the absolute destruction in the tech sector and the NASDAQ, most of the stuff in NASDAQ, it's the end of the world. The only thing is when you get into that time frame, when you get into that sentiment, all of a sudden everybody is sold out. Everybody knew the Fed was going to be raising rates and be aggressive because they've messed this up like no other Fed has ever done. And so they've sold like crazy. And then when the Fed action came, it was, sell the rumor, buy the news.
Yeah, Trader Vic, I've asked him once, do you think the Fed is making a policy error? He said, they always make policy errors.
Yeah, it's true. There's been no Fed, in my opinion, in my 40 trading history,
that's
been as idiotic as this one.
I think, okay. All right. So, yields, and I know you follow interest rates.
Yes.
I thought we were going to peak around, 210.
I actually thought it was around, I thought this wave would be around 204. I'm going to just put a 10-year yield chart.
So it surprised you too a little bit.
And let me just get the correct weekly analysis up there. And we were actually looking for that resistance that was around 214 was the most. And now the next one is up over here around 2.5, 250.
Right.
But we're in a time frame coming up here pretty soon where we should get some peak in interest rates and pullback and a minor rebound in the bond market. But the bond market really, which we were looking for a large decline in bonds, and it came right on time, that now has had a very negative analytical shape to it. And it looks to me like the pullback in yields will be temporary and then yields moving up again.
Okay.
So that's what you're looking at there is a weekly, and the weekly cycles are suggestive of a decline into the May-June period or a rally in futures into May-June. You'll note that where the support is right over here, that is our sell futures zone right there. And these two vertical lines are the time frame for yields to bottom on a pullback.
Very comprehensive views that you give, Steve.
Yeah, thank you.
Very, a lot of people give you price. A lot of people don't provide time zones for you really to be on the alert for being able to pull the trigger.
Yeah, well, that's what makes our analysis so unique, and specifically for cycle analysts, there are only a handful out there in the world that do anything like this, is that it's time and price both.
Right. So you're a little GAN and you're a little this. It's really a nice combination. So I think the toughest trade on the board right now, since you covered the S&Ps, the $1 billion question that I'm asking people was that the low for a new high or a failing rally? You answered that. How about for WTI, which had that blow off move towards 130 and gave it back in a week, gave back plenty. Failing rally here as well?
Well, we had actually talked about the rally getting up between 108 and about 112. Now it's done just a little bit better than that. But that was, you can see in here this should have been a corrective period right in here.
Yeah.
Where you see this very normal cycle that would have brought this down. But then when they were lining up on the border at Ukraine, then there was just a huge change. And so what happened was that you see this little blue arrow, it kind of shifted out long because of this blow off right there. Yeah. And, we put this note up on March 9th, which you can see, which the real question is that, have we reached the level of demand destruction when you're up at 130, 135?
Do you think we did have?
I actually think it's more of, if it wasn't Biden that was the president right now, there would be just a massive amount of restarting of oil production up at these levels. I think it's a combination of demand destruction and a combination of supply that will start to come out. The supply used to come out at $70, $75 a barrel, but This time it didn't because of the negative
Political.
fossil fuel sentiment out there.
Yeah.
And of course, we exploded on the upside. So with that important cycle bottom that occurred there, we're now in week one of the advance. And I want you to note, this is the reversal scout right over here, where the momentum turned up at this point and how it continued to give you positive readings. When you get a correction that occurs and the momentum stays positive, and that's pretty much a confirmed cyclical low, you don't make a high in the first week. So you can pretty much call the range here from the 90s into the 120s probably for weeks and weeks to come in here. Now we're coming into this resistance, and I wouldn't be a bit surprised to see it pull back once we figure out what's happening with the sanctions coming out of Europe, which they're getting pushed very hard. So that, once that news come out, you probably get some kind of a pullback in energy.
Okay, so Steve, there's a big debate going on as well in the dollar. I'm looking at a potential peak, maybe one more thrust up towards par. Maybe.
Well, you're looking at the dollar index, of course.
Yes, yeah.
So it's pretty hard to look at the dollar index without
looking at euro.
Looking at euro, which is 57% of it. So
right. Go euro.
If you look at the dollar right in here, the analysis, well, you can see that low where the cycle nesting right over here was a little late, but that's where the low came. You made the megaphone consolidation pattern, and then you broke to the upside. Now, these are, pretty significant areas up there of resistance, and the next one up there is between par and about, let's say, par and a half. So that's a pretty good target. You can see our projections pointing up there. But, what you really have to look at, of course, is the euro. And when you look at, I'm just going to look at the euro futures.
Your smaller cycles look like they were peaking in April. That you just had up there. I
think so. But see this pattern in here in the euro?
Yeah.
It's horrible. I mean, that you can see the inverse where you have the megaphone consolidation.
Right.
And then you break down.
Overthrow. And it had an overthrow.
And you see the shape of this cycle right in here. The probability when you get this shape of the next rally failing and another decline, and this takes you out over here into June, July, that's, of course, points to the potential for a June, July peak in the dollar. That's a long way from right now.
Yeah.
So if you're looking at the dollar index, you almost have to look at every other future pair because it's a massive mixed condition when you look at this. I mean, if you look at the dollar versus the yen, I mean, it's extraordinarily strong, and that's because the Japanese government, the Bank of Japan, are bigger idiots than our Fed. So, I mean, they have what they've done to that economy with with quantitative and qualitative easing means that their economy cannot run without the government doing everything. So if they ever do take the medicine, it's going to be just a horrible situation for them. And of course, that would be the end of the run in the dollar against the yen. It would change. But right now, dollar yen, I'll put that up because I know you guys are interested in that.
Yeah, I'm interested in what your cycle work is saying into this blow off.
So here's the dollar yen, and it looks like it could make it up over here to about 123 approximately.
Yeah.
At that level, it's made it up into the through the target zone right up over there, and we have a rising support, and that takes you down over here. So somewhere in here, the dollar is likely to peak, and you get a pullback. The only way that's going to happen is if there's a significant tone change in the relationship between interest rates in the U.S. and Japan.
Right. They're very tied at the hip right now.
Yeah, and you can see this dashed line. That's a VTL right there. That's called a valid trend line. I have a whole cycle analysis workshop that discusses that. And you can see it just came down and touched, and then absolutely blew away from that. So the supports right in here into this June, July timeframe are around 117, 117 and a half, 118 and a half. That's about the area we would expect it to pull down to once this peak is made, and it might not be for another month. You know, when I look here, I'm going to just switch over to a daily chart right over here. And I can, the time frame right over here is April 26th for that pullback on the daily chart. So that even if it did that, it would then probably rally again to get out to this May time frame.
Okay, a lot of things happening June, July, May through July.
Yeah, lots of things. We actually think the stock market will pull back into that time frame and then try one more time, you know, pull back and try one more time.
Yeah, people will try the sell in May and go away and be rewarded for a few weeks, maybe. Huh?
Yeah. Yep.
Okay. So why don't we go to what all the central banks are doing? We had that big spike in gold, Steve, at what was it, 2080, broke about 200,
that was actually,
came back.
That was a very, of course, significant move, and significant cyclically also, because what we had expected in the gold market with that, this huge pennant formation, which is essentially a bull pennant off of this big move from way down around 1100. We thought that the breakout to very significantly higher prices was going to come after the completion of that, which was due to occur in May, June. When that big spike came on the panic, as you can see here in that big shooting star, what that did was it raised the targets on the downside for this time frame. So while we thought it could get down under 1700, once this happens, it skews it to the upside. That doesn't change the timing, which was still in here in May, June. And here's the support confluence areas right there. So the top of that is around 1900, which we just got down to. The bottom of it right here is about 1835. This is a massive buy area, in my opinion. And then I think it's all-time highs over here into later in the year.
One more bus stop in metals. Silver, same picture?
Well, silver is a very similar picture. It has slightly shorter cycle patterns to it. The silver cycle is actually on right over here. That's that silver colored cycle bracket. But the silver picture is the same. I heard you talking about silver. I've been buying and storing physical silver right now. Because I think it's just the right time. So again, this is the time frame right over here is May, June. If you don't understand these cycle patterns, look at these yellow zones right in here. Those are the corrective nested areas for silver. And look at how each one of those brought the downside correction. I mean, you're looking back here, way back into 2019, and correction here, that's this correction, and look what's right here.
We're due.
So this is a period of a problem here for the silver market, and I love seeing that because and the way that it's pulled back here is perfect. This takes you out over here into late May through early July is the normal variance. And also that would give you the time frame for the likely bottom to be created and get into the next multiple rising phase. You can see in here, here's the gold pattern right there and the silver pattern over here a little bit later. And you see all of our upgrades right in here as it kept going up as we keep raising these targets over here. And again, the top of this, which we just got down to, is about 2470. The bottom in here is about 2370. So right in here, the 2470 to 2370 to me is a very high probability long side entry zone between late May and late June or early July.
Okay, we have one attendee request. Perhaps we could wrap it on it. It's the Aussie dollar. The commodity currencies, Steve, have been very strong with the commodity rally that we've had. So curious, you're taking Aussie if you follow it.
Sorry.
And that's from David Cressa.
Hello, David.
And Richard Adams has commented, wow, this guy is solid gold. So your cycle's coming up.
What is the Aussie? I'm just absolutely drawn.
AUD.
US?
AUD.
Oh, AUD. I don't know what's up.
AUD, USD.
I was drawing a blank. I look at it every single day practically, and all of a sudden I couldn't think of it. So here is the weekly pattern right over here. And thanks, Richard, for that really nice comment. Here are the cycle patterns here in the Aussie. And by the way, we do this on 24 different futures contracts and energies and over 300 stocks. So
Wow.
that's what our
Do you
team
sleep?
does. Well, that's what I've got, 3 other people that are cycle analysts on the team. So we do this all.
One of your team members is here, Jean-Philippe.
John Philippe.
I'm
one of the members.
One of his members. All right.
One of our members.
Okay. Yeah.
Thanks for that testimonial.
You're it's great to bring shills into your interview. I'm kidding you. I know it's sincere. I think it's let me ask you this question. I know it's great when we make money as individual traders, but I almost get more satisfaction out of people that I've taught and worked with when they're outperforming me.
Yeah, it's of course we get great testimonials, people that write to us how well they do. I'm just adjusting this a little bit because it's gotten above that level. So you can see in here the minor cycle is suggestive of a pullback. Yeah. Now, a little cycle lesson is that we speak about translations, and translations are, this is minor cycle here. When it peaks on the right side of it, then we call that a right-hand translation. When that occurs, the correction comes down into support, and then the next rally likely makes a new high.
Yeah.
You can see that that's the projection in here because we're looking at the translation. So it tells you that when you get a pullback into this time frame into April, this is going to be a buying opportunity in the Aussie.
Okay.
And then likely moving up again. I think that, the whole concept of the natural resource economies, which are of course Canada and Australia, they're going to continue to do well under this environment. Brazil, right?
Yeah. All right. Well, Steve, great presentation with some excellent looks. Best way for people to follow you or get in touch with you?
Yeah, well, you can go to AskSlim.com. Here's AskSlim.com right over here. That's the front page. And you can go there and learn a lot about our site. There's tons of stuff on here. You can become a free member and then be really start to learn about the type of analysis that we do. And you can explore our services in there. We have, if somebody joins at, let's say, a level 2, they're going to get, that's included with a lot of our futures analysis in the stock market and my video library about trading, which I've produced 600 videos, which is there also. So become a level 2 member and you'll just begin to learn a ton about what we do.
Steve, with grain shortages increasing and fertilizer prices where people won't even plant wheat because the input prices are don't make it worth it. Do you think there's going to be a lot of people copying your Ask Slim? There'll be a lot of more slimmer people in the following years.
You mean a lot of people doing this style of analysis?
No, just using their name Slim because we're in a famine.
Oh, I wasn't following you, Dale. Now I'm following you. Yes. Well, right, I don't know if the famine's in yet, but if you look at my scale readings, you wouldn't think so.
Yeah. Anyway, Steve, a pleasure.
Yeah,
and
great.
My trading warrior brother, Steve Miller, find him at Ask Slim and learn from the guy.
Great. Appreciate that.
All right, buddy.
All
good
right.
hunting. Good hunting. We'll keep you in the rotation. I appreciate your giving nature to come on here and share your stuff.
Sure. Thanks a lot, Dale.
Adios, Steve. And everyone else, thank you for your attention. You could join the team in 15 minutes on the Morning Edge, and we'll see you tomorrow. Adios. Learn about World War III tomorrow with Dr. Pippa Malgrim. She thinks it started. You're welcome, Mary. Thanks, Slim. See ya.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.